Welcome to this video on day trading Emini futures, one of my favorite setups that I look for every single day. This is very, very reliable. I invite you to add this to your trading arsenal. So here it is. It is a volatility trade based on behavior of traders that is fairly darn predictable. So this is not one of those trades that's based on, some ancient Phoenician numerology or something that's esoteric or astrology or anything like that. This is based on the very real behavior of traders, especially those at the exchanges and on the floor. And I noticed this when I was at the Chicago Mercantile Exchange, and I was on the floor, and they have a real advantage there. I mean, a lot of the pits are closed down now, but I'm talking back in the olden days when I was getting some training there. And so I was down on the floor of the Chicago Mercantile Exchange, S&P pit, and it was very obvious that people would trade very actively during the morning, and then they would go to lunch. And we all know this. I'm not telling you anything you don't know there. But as I was watching the Emini futures pit, it was very interesting because most people know that general rule. The market's most active in the morning and then dies down at lunchtime, and then volatility can come back in the afternoon. However, it was very interesting because when I was there, you could literally and physically see which traders were leaving and which ones were not. And that's a real advantage. It really is. And so you could see whether, the whales were leaving or if they were staying into early lunch. Sometimes they wouldn't leave. And then other times they'd leave and they'd come right back. And so it's almost like they were trying to fool people. Heck, I think they actually were. And because they knew, hey, everybody knows this general pattern. And once everybody knows something, guess what? It's going to stop working. So sometimes they'd leave early. Sometimes they'd stay late. Sometimes they come back to lunch early and so forth. And yeah, there was an advantage in being able to see that. But if you don't trade at the floor, and I'm a screen trader myself, then there's a general rule that we can follow, and then we just have to watch the energies in the chart around that time. So here it is. And again, this works for day trading E-mini futures, but you can use this for day trading anything. It's really specifically for day trading, not for swing trading, because it's based around a time of day, and that is the end of lunchtime, when people are coming back and they start trading actively again. So here's how we would do it as a screen traders. Here's how I do it. So there's a little range of time. So these times down here, these are California times because I'm in California. So that would be noon Eastern. So you can do this with stocks too, by the way. A stock market works the exact same way. So this would be noon Eastern. And obviously then that's 11 Central. Futures mostly trade out of Chicago. And so that's the big futures market there. And you're looking for the market to go kind of flat here and to come back in somewhere after 10 o'clock, because 10 o'clock would be 1 o'clock Eastern. So this is your lunch hour, if you want to call it that. Now, sometimes they'll take longer than an hour, but it's usually after this time, and I'm looking at it anywhere from like about 10:15 to before 11. So about 10:15 to 10:45, kind of that half-hour zone is really the magic zone that we're looking for. Okay, so if you look at this, and we've done some recent videos on Bollinger Bands, and Bollinger Bands help you with this too, because when the markets stay down and go into low volatility. And so you see the Bollinger Bands squeeze together here as people leave, and they squeeze again here. And then what we're doing is we're looking for an expansion out of the contraction. That's the whole point after lunch is over, around this time. So that's the setup. Now, how do we identify those trades? Well, you can tap whatever trading method you use, whatever signals you use, whatever indicators you use. I don't have time to go into my whole trading method, obviously, in just a few minutes here. But so that's one of the nice things about this is that you can really apply this to whatever technical analysis method you use. But I find using Bollinger Bands really helps. What I'd be looking for here, just to give you a little indication is, first of all, cycle high. This is a kind of an average momentum exhaustion pattern here for us. And then we look to trade in the direction of the expansion. And here, if you're watching my previous videos on Bollinger Bands, the Bollinger Bands, we hit the lower one and they move away from each other. And that's a good indication of increased volatility in this direction. So that would be one example. Okay, let's go to the next day. We'll just do a couple of days in succession here. And let's see, look around that same time. All right, so here we go. And each setup will look a little different. The setup's not necessarily the same all the time. What is the same, or we're looking for, is an expansion of volatility. So here we get a cycle high. And then this is the key here. So this time, market comes back up, makes another cycle high, but does not touch the upper Bollinger Band. That shows weakness to the upside. Therefore, we're looking to go short. Also, momentum is decreasing. That's a momentum shift at the high. And therefore, we'd be looking to go short. And that's exactly what happens. Volatility comes in dramatically to the downside. See, this is the thing about volatility. It determines the range of your profits. And that's why this trade is so good, is because you're trading inside of low volatility and catching a new high volatility movement in the market. Let's look at the next day. We like to catch these big momentum moves. Why? Because, well, a lot of profit to them. That's your reward, part of the risk-reward ratio. All right, here we go again, around the same time. Now you could, this one came in a little earlier, came right at the end of lunchtime, would be your signal. And you could trade this a couple of different ways. Again, I mean, here we get our momentum signal to go long, comes up, touches the upper Bollinger Band, all right? And you could even wait a little later if you wanted to, and just take the first retrace in the trend here. And this ends up going, quite a ways. Get a nice move. Again, big move in the direction of your trade, which is good for profits. We like profits. All right, and here's yet another one. We'll look at this as will be our last one because we're already kind of late here into this. So again, notice the Bollinger Band squeeze occurring. We touch the lower Bollinger Band. We do not touch the upper Bollinger Band. And then again, Bollinger Band, they start to move away from each other. We go into the lower Bollinger Band. We've got a cycle high. We've got a lower momentum shift here, and that's our key to take this in the direction down as it expands. And again, the whole move, depending on how long you wanted to stay in it, pretty good move, right? Pretty good profits there. So that's the idea, is to look for keys. I've given you a couple of tips there, but you can use other methods as well, whatever your trading method is, to look for trades coming out of lunch for increased volatility for some pretty nice big trades. So that's one way I day trade E-mini futures. You can use it with stocks as well, of course. So if you like this video and you're watching it on YouTube, please click the thumbs up icon below. And I also like it if you leave a comment. That encourages me to create more free tutorials for you, which I enjoy doing. Also, right now I'm giving away one of my favorite trade strategies. It's called the rubber band trade and has an extremely high win-loss ratio. It's a very simple strategy. You can learn it in about, probably 26 short minutes. Get that video explaining the trade strategy absolutely free by clicking on the image in the top left corner, or if you're on a mobile device, go ahead and click on the little eye with the circle around it in the top right-hand corner of this video. And if you're not watching the video on YouTube, then there's probably a link either below or an opt-in form on the side. And however you decide to ask for the video, please, I look forward to giving it to you. I will personally send it to you via email.